Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, May 25th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. Right now, just ahead of pre-market GDP data here and initial jobless claims, we are currently trading higher off the previous session's close. A bit of a range-bound market overnight with strong pivot lows in the 41.35 to 41.37 half zone. That's basically right here at the middle of the key range. Again, if we see a positive response to GDP and initial jobless claims, we could be looking at a potential bounce to the upside here. Overall, this market's been staying in this key range right here. That in key range has been developed here since the beginning of the month, end of last month here, and we've stayed mostly within the middle of that range. We did make one move up back to the middle, and we're sitting there yet again. So again, are we going to make a continuation pass down to the bottom of the range and continue the path of the expanding range, or do we bounce back up and challenge the highs right away? Keep an eye on 41.37 half. That's going to be the key level to watch here. But overall, this market remains bound by the boundaries of this range until proven otherwise. Eventually, a breakout from this range will trigger a nice phase of expansion. Taking a look here at the NQ. This one moving quite a bit higher here on a very bullish earnings release from Nvidia. Very, very strong after hours, and you can see already this thing powering higher. A little pullback here. After hours and a continuation up. Checkmark trend day developing very strong. This is something we mentioned with the NQ before. This one is almost immune to selling pressure at the moment. It continues to see strength. Failed new low yesterday with that strong turnaround here late in the day on earnings, and it's very similar to what we saw before. We've seen some earnings turnarounds here that have led to some strength. Each of the last few weeks we've had something that's turned us around in big fashion here, and we've seen very similar continuation here to the upside. A hold off the 13.6 level, higher low in the bullish Pima trigger zone. This market continues to be very strong. Fading it is not a good idea unless we see a very strong rejection right now approaching the previous week's highs. If we take a look here at crude oil currently down 1.8%, currently testing prices below the previous session's low. A bit of a box on an intraday time frame below the previous session's low. That could provide a fade opportunity. If this market's going to rally here, this is the best spot to watch for a potential rejection or fade. We've been trending up a bit. We're now below the previous session's low and into the midpoint here of that breakout bar. This is the zone here where bulls want to trap and reverse price back up. If it can do that, we could be looking at a high range reversal back up, perhaps an outside day up in the best case scenario. Do we see a high range day today? That could be somewhere in the vicinity of a 2.5 point day. Right now we're at 1.55 points. So can we reject prices below the previous session's low? If we can get back above 73, 73 and a quarter here, that opens up the potential for an outside day up. Failure to get back above that zone, and you may be looking at a trade back within the trading range here toward 70. So keeping an eye on the previous session's low in crude oil. Looking at gold futures, gold here setting up what could be a great rally back up if it can push through yesterday's pivot high. Those are the pivot highs we've been watching right there, those 4-5 day highs. If it can push through that zone, that would also coincide with the bottom of this key range, and it opens up a squeeze back toward 2033. And maybe even up here to new highs as this thing continues to develop an expanding range as well. So keeping an eye on this pivot high up ahead for a potential break. Until then, we could be stuck in the range here between 1985 and 1950. Overall, 1960, the level we're at right this moment, is the key market structure edge. So failure to hold that level could open up a return back toward 1830, the previous year's close. And holding this level or finding an opportunity to reject could turn us back around and open up a move back up. So keeping an eye on that pivot high right there for signs of a potential breakthrough at some point over the next several days. Lastly, taking a look at the YM. The YM here, very bearish day in the previous few days here, closing the day near lows. And each time we've closed near lows or at lows on a new closing low, we've seen price turn around the very next day, turn around the very next day, turn around. We've seen that pattern happen quite often. We do have pre-market data coming out here very, very soon, and that could open up a surprising rally back up. But really, this market needs to reclaim the 33,000 level, for bulls at least. If price can push back to 33K, it opens up a return back toward the 33,700 level. Failure to push back to 33K, and we may be looking at a potential downward transition phase that could lead us back toward the recent lows of 31.6. That'd also be right where the key range lows are as well. So 33K, very, very important. Can we find a way to get back above that level? If not, that could lead to a further drop down below. So 33K is the pivot to watch here today. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.